Hello there. Thanks for joining me for the accounting and finance coaching session where I teach financial literacy. My name is Echela Okori, and today I want to teach you something very special. You don't need to be an accountant to learn this, whether you are a doctor, whether you are a barrister, whether you are an engineer, a pilot, whoever you are, as long as you make investments, as long as you get financial statements, this is for you. I want to teach you how to analyze financial statements like a pro. Okay? I'll teach you how to analyze financial statements like you are a real professional. What professionals do with financial statements is what I want to demystify. Good. Now, let me share the story with you. Someone was getting financial statements as a shareholder. He got for year 1, he got for year 2. In year 3, he held on to his investment. Unfortunately, he lost almost everything. But he had the previous year's financial statements and even the year before, which he could have analyzed to know that the company was going in the wrong direction. But he didn't do anything. He just collected the financial statement and dumped it. Don't be like him. Another person was in the office where, as a member of management, the management team had to analyze the draft of the audit report. They had to look at the implication and the strategic decisions to be made. Unfortunately, they didn't find him important enough to be in the meeting because he had never demonstrated knowledge of analyzing financial statements. So you don't need to be an accountant to analyze financial statements. It is the job of accountants to prepare these financial statements. It is the job of the auditor to express opinion on them. It is your job to analyze the financial statements when you get them, because they have prepared the statements and they have communicated the financial information to you. You are the decision maker. You are the user of these financial statements. So you must know how to analyze them and to make the best decision from them. So I'm going to teach you how to analyze financial statements like a pro. The first thing you need to do when you get financial statements, number 1, you need to gather. I want you to gather the financial statements. There are various statements that you need to gather. Put them in the basket of decision. Put them in the basket of analysis. The first information, okay, gather your financial documents. What is the first one? The first one is the SFP. This SFP, we'll call it the Statement of Financial Position. I want you to look for it and get it. Get the Statement of Financial Position. We also call this the balance sheet. Good. Now, the next thing after you do this, I'll tell you. But first of all, what are the other ones you need to get? You also need to get the income statement. The income statement is what we call the statement of profit or loss, another comprehensive income. You need to get this. Then the third one you also need to get, you need to look for the statement of cash flows. Look for this statement and put it in your basket of analysis. The fourth one you need to get is the statement of changes in equity. And lastly, you get the notes to the account. So once you get the financial statement and you want to analyze, the first step is for you to gather the document. You get the SFP, you get the income statement, you get the statement of cash flows, you get the statement of changes in equity, and you get the notes. The next step, which I'll call number 2, is to understand what they do. You understand. Now, what are you looking for in all of these financial statements? This is what professionals do. Statement of financial position is showing you the position of the company as at a period from the existence of that company, of that firm to today. So it's going to show you the assets, it's going to show you the liabilities, and it's going to show you the equity. This is what the statement of financial position does. So it shows you the position, the financial position of the asset, of the liabilities, and of the equity. That is the contribution of the shareholders. That is what we mean by equity. Good. The next one is the income statement. What is the income statement going to show you? The income statement is going to tell you about performance. You are analyzing performance. When you come to income statement, you are analyzing performance. Is a company performing well or is performing badly? So you are going to look at, is it making a profit or is it making a loss? You'll be able to look at other stuff like the revenue made, but basically you are looking at what? Performance. Then when you come to cash flows, this is also very important. You are looking for three things here. You want to know the operations. You are looking at the operating activities of this company. You are looking at also the investing activities. Where has it invested? What are the investing activities? Where the company has invested. And lastly, you are looking at the financing activities. But to summarize, when you pick up the statement of cash flows, you are looking at cash that came in and cash that went out. That is cash inflows and cash outflows. Then when you come to statement of changes in equity, equity refers to what belongs to the shareholders, what they contributed. So we say equity and reserves. Now, when you get here, the statement of changes in equity wants to show you the position of the equity from the beginning, as at the beginning of the year, and also whether it has changed at the end of the year. So if it was 1 at the beginning and then it is 2 at the end, it means there were changes during the year. So this is the essence of the statement. Now the notes, most people don't look at notes, but notes happens to be one of the most important of all these statements because there are so many things that are put in notes. I don't want to say hidden, but there are so many things that the accountant is not allowed to put as a line item, but the accountant is mandated by standards to express them. You must show, you must disclose. And the only place that can disclose it is in the notes. It's in the notes that you can see policy of the organization and even the policy changes. If there were some unusual things that happened during the year, it will be stated in the notes because standards make it mandatory to make those disclosures. So I said the first one, you gather. The second one, you understand. And number 3, you now review. Good. You review. Now, how do you review? The review means you now begin to look at what happened. You begin to look at all of them, the changes. You check for consistency. Is there consistency in the use of policy? Is the organization consistent? You look at that. That is important. And also, there are other things I put down. You look for consistency. You look for compliance. Compliance, here, you're looking at whether the organization complies with GAAPs, generally accepted accounting principles. That is, if you're operating in the US, for instance, that is what you apply. And of course, generally, accountants also are expected to follow them. Then, if you are also operating in a country like Nigeria and in most countries of the world, you have to apply the International Financial Reporting Standards. And of course, there are other regulations. So you have to ask yourself, is this organization that I want to invest in or this organization that I've invested in, are they complying with standards? Are they complying with statutes, statutory obligations? That is also very important. Then the next one, you also look at the audited status. These are some of the reviews you make. Has it been the financial statement you have they been audited or they are unaudited? You have to look at that. Also, if they are audited, you have to ask what is the standing of the auditors? Some auditors are not they are not highly rated. That if you are among the big 4, for instance, then you can say, oh, this company is audited by one of the big 4, so it must be a good company. This is also important. Another thing is, we've talked about looking at the financial position. You review the financial position. You review the performance. You review the equity profile. To look at the equity profile, you are looking at the equity and reserves. And the best place to do that is by looking at the statement of changes in equity. Okay? And then you also look at unusual activity. Unusual activity. Was there a measure? Was there a huge write-down? Was there something like impairment loss and they had to do one big, impairment loss recognition? Also, you could talk about a write-down, maybe a net realizable value using IAS 2. Did that happen? If you see an unusual activity that had not been happening over the years, and this particular year is happening, then you have to pay attention. A merger, maybe a sell-off of one big, huge asset. If that happens, you also call that unusual activity, and it's very important that you pay attention. Why are you paying attention? You are paying attention because it could be a measure of creative accounting, negative creative accounting. It could be some form of window dressing. So at this point, I want to believe that you can analyze financial statements like a pro. The first thing to do, you gather the financial statements. The next one, you understand what the financial statements do. The one that measures position, the one that measures performance, the one that tells you about the equity profile, and you look at the notes, you also look at all of that. So when you do that, the next thing you do, you review, you carry out comparability. You look at the previous years and the new year. Are there percentage increases or decreases? This is very important. Okay? You check for growth. You look at some of the indices. You look at revenue, for instance. Is revenue increasing or is it decreasing? Now, after doing all of that, the last one you now do, you carry out what we call ratio analysis. Then you carry out what we call ratio analysis. So you check for liquidity, you check for efficiency and all of that. But generally, as a layman, when you pick up the financial statements to analyze it as a pro, these are the things that you are expected to do. So if you enjoy this class, I want you to like, to share, and please don't forget to subscribe to our YouTube channel. Bye for now.